Hello, my name is Shane Riedel. I'm the CEO and co-founder of Elucidate. Prior to founding Elucidate, I had a career in finance, first with Goldman Sachs and ultimately with Standard Chartered, where I was the head of financial crime compliance for the FI and correspondent banking business line. In that role, my responsibility was to ensure that the bank was able to safely and securely service its portfolio of financial institutions' clients, particularly around payments and trade finance. At Standard Chartered, I was part of a large and talented team of individuals working to pursue the highest standards in financial crime risk management. And despite those efforts, during my tenure, Standard Chartered, like many other banks in the market, was subject to multiple regulatory actions relating to the FI business. What this made me realize was that will and resources alone are simply insufficient to solve the problem of counterparty FI risk management. This is a systemic problem, and it requires a systemic solution. From there, I began to ask, why don't we treat fin-crime risk similarly to credit risk? Why don't we have an equivalent of Moody's for fin-crime risk? Why can't we rely on independent and standardized assessment of risk shared between FIs? Elucidate is the product of these questions. Working with my co-founder Felipe Garcia and an incredible group of data scientists, and leveraging guidance issued by the OCC, the US regulator, and others, we were able to build a quantified model of financial crime risk, very similar to a credit risk model. We took that model to the BaFin here in Germany and the ESMA, and we became regulated under the European benchmark regulation, making us the only regulated financial crime standard in the market. Since we launched in 2019, we've continued to update and optimize our modeling of risk. In 2024, we anticipate to process and analyze in excess of 2 billion payments, representing a mutualized dataset from across the market. This unparalleled dataset enables us to provide an increasingly granular view on risk to meet our clients' ever-changing needs for risk assessment around institutions, transactions, and customers. The reaction from the market has been overwhelmingly positive, which is unsurprising given the general dissatisfaction with the status quo. In the beginning, we expected that our clients would be banks, that correspondent banks would use us to monitor the risk of their networks, and that respondent banks would use us to keep their correspondents happy. We now work with some of the largest banks in the UK, Europe, and Africa, so this wasn't wrong, but it was an underestimation of our utility. We now have a growing number of non-bank financial institutions using Elucidate to grow and protect their business models, ranging from sovereign wealth funds all the way through to payment service providers and crypto exchanges. In essence, all entities focused on managing financial crime risk and subject to financial crime regulations. Compliance and operations teams love us for the amount of time that we save them. They no longer need to spend their time developing manual risk assessment methodologies or writing extensive reports. They're able to easily use their own data to create standardized analysis and ratings of risk, and to apply that onto assurance, risk assessment, and due diligence. But the real excitement comes from the commercial benefits. The reason that 95% of the cost of correspondent banking is rooted in compliance is down to the lack of trust and transparency between financial institutions. By partnering with Elucidate, our clients are able to build trust and thereby gain greater access to better and stronger commercial partnerships, enabling them to service their customers at lower cost. Fin-crime risk ratings do not serve only to manage downside risk, but indeed to unlock commercial opportunity. That's an ROI that everyone can be excited about. Elucidate is committed to creating opportunity for our clients and for their underlying customers. Our technology directly impacts the friction that has resulted in de-risking, financial exclusion, and commercial underperformance. Going forward, we'll focus on accelerating the growth of our existing customers and new ones, and expanding our focus beyond our current footprint into Latin America and Asia. And of course, the technology will continue to benefit from AI and supervised machine learning, providing our clients with additional analysis whilst maintaining explainability and transparency. We believe that a better understanding of risk creates opportunities across the market. Our goal is to be the preferred partner for all financial institutions as they seek to utilize risk data to drive prudent growth and expansion.